Hey, folks, welcome back to Boss Economics World, where we cut through the noise, expose the nonsense, and shine a spotlight on the economic dumpster fires your so-called leaders keep starting. I'm your host, the guy who's not afraid to call out the suits, the ties, and the lies, especially when they're coming from the highest offices in the land. Buckle up, because today, we're diving headfirst into the latest economic circus starring none other than President Donald Trump and his band of merry market wreckers. Spoiler alert, it's not pretty, it's not smart, and it's definitely not going to end well for your wallet. Let's go. Oh, where do we even start with this one, folks? President Trump, in his latest Fox News Sunday Morning Futures interview, had the audacity to call the current economic chaos a mere period of transition. A transition, huh? Sounds like something you say when your GPS reroutes you through a sketchy alleyway, not when you're steering the world's largest economy into what looks like a brick wall at 90 miles an hour. But hey, maybe I'm being too harsh. After all, Trump's got a plan, right? Tariffs, tax cuts, federal job slashes, sounds like a recipe for prosperity, or, a Molotov cocktail for the markets. Let's break this down, layer by layer, from the surface level spin to the deep, dark economic truths they don't want you to see. First off, let's talk about the tone-deaf rhetoric coming out of the White House. Trump's address to Congress on March 4th was a masterclass in downplaying disaster. There'll be a little disturbance, but we're okay with that, he said. A little disturbance? Tell that to the investors who've watched the S&P 500 tank over 6% since its February 19th peak. Tell that to the tech sector, where giants like Nvidia and Tesla, once the darlings of Wall Street, are now bleeding value faster than a sinking ship loses passengers. And let's not forget the bond traders, who are practically screaming from the rooftops that the risk of an economic stall is growing by the day. Treasury Secretary Scott Bessent even had the gall to call this a detox for the economy. Detox? Buddy, this isn't a juice cleanse, this is economic chemotherapy, and the patient, that's us, folks, is looking sicker by the minute. Now, let's dig into the first layer of this economic mess, Trump's on-again, off-again tariff policies. If you've been following Boss Economics World, you know we've called out tariffs before as a double-edged sword. Sometimes they protect domestic industries, but more often, they just jack up prices for consumers and spook the markets. Trump's latest tariff flip-flops on Mexico and Canada are a prime example of how to tank investor confidence in record time. Just last week, we saw the deepest stock market rout since Trump's re-election 4 months ago. The S&P 500 has had 7 straight days of swings of at least 1%, a level of volatility we haven't seen in years. And Trump's response? I'm not even looking at the stock market. Oh, great. The captain of the economic ship isn't even glancing at the radar while we're sailing into a hurricane. Brilliant. But let's back this up with some hard data, shall we? According to a recent report from the Peterson Institute for International Economics, Trump's proposed tariffs could increase consumer prices in the U.S. by up to 1.8% annually, costing the average American household an additional $1,200 per year. And that's not even counting the ripple effects on global supply chains, which are already strained from post-COVID recovery and geopolitical tensions. Just look at the manufacturing sector. Purchasing Managers Index, PMI, data from the Institute for Supply Management shows U.S. manufacturing activity contracting for the 5th straight month in February 2025, with new orders plummeting due to uncertainty over trade policies. But hey, Trump says it's all about bringing wealth back to America. Sure, if by wealth you mean higher grocery bills and a decimated 401k. Next up, let's talk about this so-called detox from public spending. Treasury Secretary Scott Bessent claims the U.S. economy needs to wean itself off government support. Now, I get it, nobody wants to be dependent on handouts forever. But here's the thing, public spending isn't just some welfare program for lazy economies. It's the grease that keeps the wheels of growth turning, especially in times of uncertainty. When you slash federal jobs and cut spending willy-nilly, you're not detoxing, you're starving the patient. Just look at the Congressional Budget Office's latest projections. If Trump's proposed $1.5 trillion in spending cuts over the next decade are implemented, GDP growth could be shaved by 0.7% annually, and unemployment could rise by up to 1.1 million jobs by 2027. And guess what? Those job losses hit the middle and working classes hardest, the very people Trump claims to champion. Let's put this in perspective with a real-world example. Remember the UK's austerity measures under David Cameron in the early 2010s? The British government slashed public spending to detox the economy after the 2008 financial crisis, and what did they get? A decade of stagnant growth, a double-dip recession, and a widening wealth gap. Sound familiar? Trump's team seems to think they can pull off the same trick without the same consequences. Spoiler alert, they can't. And the bond market agrees. Yields on 10-year U.S. Treasuries have been spiking as investors demand higher returns to offset the growing risk of a recession. The spread between 2-year and 10-year Treasury yields, a classic recession predictor, has been narrowing dangerously close to inversion, a signal that's preceded every U.S. recession since World War II. Now, let's get to the core of Trump's argument, the promise of tax cuts and tariff revenue as the magic bullet for economic growth. Sounds great on paper, right? Cut taxes, rake in tariff cash, and watch the economy soar. But here's the problem, it's a fantasy. First, let's talk tax cuts. Trump's team claims these cuts will spur the economy, but who benefits? According to the Tax Policy Center, 60% of the benefits from Trump's proposed tax cuts would go to the top 10% of earners, while the bottom 40% would see almost no change in their after-tax income. So, while Wall Street fat cats might toast to their bonuses, the average Joe is left scraping by, especially as tariffs drive up the cost of everyday goods. And tariff revenue? Don't hold your breath. The U.S. collected just $88 billion in customs duties in fiscal year 2024, according to U.S. Customs and Border Protection, hardly the windfall Trump's team is banking on. Even if tariffs double, the revenue wouldn't come close to offsetting the $1.5 trillion in spending cuts or the $2 trillion in tax cuts Trump has promised. And let's not forget the collateral damage, retaliatory tariffs from trading partners like China and the EU, which could cost U.S. exporters up to $40 billion annually, per the U.S. Chamber of Commerce. So, instead of a revenue boom, we're looking at a trade war bust. But hey, Trump says it's all worth it because globalists don't like how rich our country is going to be. Yeah, rich in chaos, maybe. Now, let's zoom out and look at the big picture. Are we headed for a recession? Trump dodged the question on Fox News, saying, "I hate to predict things like that." Well, I don't, so let me lay it out for you, folks. The warning signs are everywhere. The Conference Board's leading economic index, which predicts future economic activity, has been declining for 18 consecutive months as of February 2025. Consumer confidence, as measured by the University of Michigan's index, dropped to its lowest level since mid-2022, with inflation fears and trade policy uncertainty cited as top concerns. And let's not forget the labor market. While unemployment is still relatively low at 4.1%, job openings have fallen by 25% year over year, according to the Bureau of Labor Statistics, signaling a cooling economy. Oh, and one more thing, the Federal Reserve is in a bind. With inflation still stubbornly above the Fed's 2% target, core PCE inflation hit 2.7% in January 2025, Jerome Powell and company can't afford to cut interest rates to juice the economy, especially with Trump's tariffs threatening to push prices even higher. But if they keep rates high, or worse, raise them, they risk choking off growth entirely. It's a classic catch-22, and Trump's policies are only making it worse. So, what's the takeaway here, folks? Trump's economic agenda, tariffs, spending cuts, tax cuts for the rich, isn't a period of transition. It's a recipe for disaster, cooked up by a government that's more interested in scoring political points than protecting your financial future. The markets are in turmoil, consumers are getting squeezed, and the risk of a recession is growing by the day, all because of policies that prioritize headlines over hard data. And the saddest part? The people who'll suffer most are the everyday Americans Trump claims to fight for, the factory workers, the small business owners, the families who can't afford another economic downturn. Here at Boss Economics World, we're not just here to complain, we're here to demand better. So, to President Trump and his team, here's our message: stop treating the economy like a casino, stop gambling with our livelihoods, and start listening to the data, not the applause. And to you, our viewers, whether you're a concerned citizen or a finance pro, keep your eyes open, your wallets tight, and your voices loud. Because if we don't hold these clowns accountable, nobody will. That's all for today, folks. If you liked this video, smash that like button, share it with your friends, and subscribe for more no-nonsense economic takedowns. And remember, in a world full of economic charlatans, Boss Economics World is here to keep it real. See you next time.